Hey everyone, welcome back to Corporate Culture, the place where we decode corporate filings. Today we are diving into a report that might make you feel a little faint, considering the company we're talking about is all about hearts. Let's hope their stock doesn't give us a heart attack. Scroll-oriented, Castits, Securities, and Exchange. Come and scroll. Today we're looking at an 8K filing from HeartSciences Inc. This report tells us about something pretty serious. They've received a notice from Nasdaq, the stock exchange, saying they don't meet the requirements to stay listed there. That means their stock could get kicked off the exchange. The problem is that Nasdaq requires companies to have a certain amount of stockholders' equity, basically the value of the company's assets minus its debts. The minimum is $2.5 million. HeartSciences' latest report showed they only had about $1.8 million in equity. Scroll does not currently satisfy listing rule 5555 EBK E1 Ched Scroll Daskety BE1 Swar Scroll E. Because they didn't meet the equity requirement and couldn't meet alternative requirements either. Nasdaq sent them a letter saying they're not in compliance with the rules. This doesn't mean their stock is immediately delisted, but it does start a process. HeartSciences has 45 days until May 5 to come up with a plan to show Nasdaq how they're going to fix this problem and get back into compliance. If Nasdaq accepts their plan, they could get up to 180 days to prove they can meet the requirements again. Scroll, the company intends to take all reasonable measures. The company says they plan to do everything they can to get back in good standing with Nasdaq. They are looking at different ways to increase their stockholders' equity and meet the minimum requirement. They have to submit a plan to Nasdaq by the deadline. If Nasdaq doesn't like their plan, or if HeartSciences can't fix the problem in time, they can request a hearing. This would give them a chance to explain their situation to an independent panel. While they go through this process, their stock can continue to be traded. Scroll negatively impact the CAC company's ability to access equity market. Scroll, if HeartSciences stock gets delisted, meaning kicked off of Nasdaq, there could be some serious consequences. It could make it harder for them to raise money because investors might be less willing to buy their stock. It could also make their stock less valuable, and it could hurt their ability to offer stock options to employees. HeartSciences has two types of securities: common stock with a trading symbol of HSCs and warrants with trading symbol HSCSW. These are both traded in the Nasdaq. The report was signed by Andrew Simpson, President, Chief Executive Officer, and Chairman of the Board of Directors on March 21, 2025. Now let's step back and look at the big picture. HeartSciences is in a tough spot right now. Not meeting Nasdaq's requirements is a serious issue that could have big consequences for the company and its investors. On the other hand, they seem to be taking the issue seriously and are working on a plan to get back into compliance. One of the biggest risks is that the company might not be able to raise enough money to fix the problem. If they can't convince investors that they have a solid plan for the future, they could struggle to meet the Nasdaq requirements. However, if they can successfully turn things around, there could be a big opportunity for growth and increased stock value. In conclusion, HeartSciences faces a significant challenge, but they are taking steps to address it. Whether they can successfully regain compliance with Nasdaq's requirements remains to be seen. It will be important to keep an eye on their progress and see how their plan unfolds. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives.